This is our Forex blog for August 21st, 2012. And like we do most days, we use our currency meter to find the statistically strongest pairs and weakest pairs. And we buy the strong versus the weak and sell the weakest versus the strong. Part one of our three-step easy Forex trading system is doing just that. One easy way of finding the strong to weak is using our sortable currency meter. And you can sort it from strongest to weakest. And you can see right now in the hourly trend, the euro, the Swiss, the pound are the strongest. CAD, New Zealand dollar, and Australian are the weakest. So obviously you want to buy the euro CAD, the euro New Zealand, the euro dollar. You want to sell the dollar Swiss, for example. And the histogram on top is made up of 5 of our best statistical tools. 3 of them measure the direction it's going, and the other 2 measure the intensity. So anytime, like you can see today, the euro is going up against almost every other currency, 80 to 100% most of the day, and the intensity's significantly above average. Underneath that, we have the 15-minute trend, hourly trend, daily, weekly, monthly. Some days they all line up, like you can see the New Zealand here, and down in the dollar and the yen as well. So basically, one of the better trades today would be buying the euro dollar and the euro yen. So let's bring up the euro dollar. First thing you can look at by looking at this chart is the point of control of the previous days right here. This is the average price of yesterday. The orange one, which is thicker, is the average price of last week. Obviously above that, it's much more bullish and likely to go up. These are Fibonacci profit targets, which most days, with the exception of ridiculously strong trends like today, are the maximum high of the day. Typically, the white 2.0 band is the end of each move. You can see when it goes above there, it kind of stalls out. I have come up with easier ways for traders, to find trends by instead of showing this in histogram format, showing it to you in colored bar format. If you see dark green bars on the way up and pullback bars that are very light red or pink, you can see light green, very little weakness, light red, pinkish, very little weakness. And I have a displaced moving average on here, which also makes it very simple to trade. When you get a nice size move up, you wait for a pullback, and then you buy. And typically, when currencies go up a lot, and I say 30 to 80 pips without any kind of a pullback, typically the first move doesn't always work. It's up to you whether you want to take that trade, but if you got in right here and out right here, you really didn't probably make or lose much. You might have made a pip, lost 2 or 3, it doesn't matter. And you never want to buy a breakout when the price is just going sideways. Wait for it to go above the high, but you're stop underneath the low. You would have got into that trade here. You would not have gone stopped out, and then you made 15, 20 pips on there. And again, a lot of times when the currency's gone up a lot, it's going to pull back more, 15 to 25 pips typically. This was so strong today that it didn't. So you got a pullback, the second pullback, it didn't really break that low, you're in again. This one, notice there's not a whole lot of weakness on that pullback. You get in, and notice the dark green bars. That's a trend is very likely to go up. Here's what it looks like on the euro yen. Very strong up. And this is a more decent pullback, about 13 pips. Went up. I have a sideways here. And really, once you identify a strong trend, there's 2 ways to get in on it. One is a pullback, which you can use our displaced digital signal processing based moving average. And the other entry method is just simply a rectangle pattern like this. Anytime you have that, you can see it went up. Pullback trade, rectangle, pullback trade, rectangle. Those are the 2 main entries that we look for once we identify trends. Now you also saw that the dollar was weak and the Swiss was very strong. And let me remove the 4-hour bands on here. Those don't work live yet. This is the average price of yesterday and the average price of last week. So obviously last night, once it broke these levels, it was very likely to trend down, and it did. It broke yesterday's value area low, which is usually a big sign of a strong trend developing. And then it broke last week's value area low. Basically last week, the market spent 68% of its trading activity between the high up here at 56 and the low down here at 96. Once that area gets broken, and whenever these are very close together, you're even more likely to get a nice trend. Basically, you're starting the day, you're looking to sell this, and most of the time trends move in 2 or 3 waves. So if it's not that weak, take profit after the second wave. If it is weak, hang on for the third wave. So you could really say this is the first wave, second wave here, and this is the last wave. This I would expect to be pretty much near the low today. And let's say you started trading at 7 o'clock right here. You see this has gone down once, twice. It's only likely to really go down one more time. Always draw your fibs on this, and it'll give you an idea of where to take your profit. And it goes to the this area right here and goes sideways. I would have just got out of the whole trade right here at 32, and I would have left another 10 or 12 pips on the table. But if you had sold this little pullback right here at 60 and you're out at 33, you made 27 pips, and your stop would just be a pip or two above the high here. You would not have even risked 10 pips in order to make you 27 pips. The key to trading, I can't believe how many people, especially new traders, tell me that they're afraid to pull the trigger. They've lost so much. The real key is small losses, big wins. As long as you're able to hold, if you have the patience and discipline to hold, to catch the occasional 20 to 50 pip win, and you have small, break evens, 2, 3 pip losses, 5 pip losses, 8 pip losses, 12 pip maximum size losses, your average loss should, average out over 50 or 100 trades to be somewhere between 5 to 8 or 9 pips. Typically mine are like 6.7 to 7.2, somewhere in that range. And so that's your average loss. Your win, even if your win is 10 pips and you're 50-50, guess what? You lose 7 pips, you make 10, right? That's 3 pips net. Out of every 2 trades you've taken, you have 3 pips. 10 pips per day doubles your account every 2 months. Let me just, I don't want to go, in the past gone over this in depth, but I don't want to spend too much time on that. Planner, your $2,000 balance, if you get 10 pips per day, you can see pretty much every 8 weeks it doubles. Obviously, it's compounded and you're trading more and more lots as the time goes on. Here's your account at the end of the year. It's truly staggering, the power of compounding your returns. That being said, 10 pips per day. So if you lose 8 pips on one trade, you make 18 on the next, you've hit your daily goal of 10 net pips. If you catch a 30 pip win, lose 6, make 5, lose 20, you pretty much hit your daily goal as well. So step 1 of our system is use the currency meter to find the best trends, and then you can look to get into those on a pullback, sideways consolidation, or another thing you can do, I'll bring up this chart right here, is you can use, and I'm going to release this pretty soon as soon as we get it working live. It doesn't work live yet. It's a very sophisticated tool. Right now it only works on past data. This will be called the FX value areas intraday, and it's basically getting 4-hour bars and showing you where the most activity happened during the previous 4 hours. As long as you're above, let me see if I already have that on the chart. Okay, hold on one second here. That was already on there from yesterday. I'm going to remove the fibs on this. Okay, so you can see those levels are now on here. This is the value area of the previous 4 hours where it spent most of its time, and I plot a green and red line right above it. The previous 4 hours it spent a lot of its time, the majority of its time right near this area. Then the next 4 hours happened. Here is the value area. This is where most traders have a position at. This is the upper value area. Whenever it stays above the value area, and especially the upper value area, this is actually called the point of control. It's the average price of the previous 4 hours. It tends to trend up. And notice during this time right here, it's up a lot. Most traders would say, well, this thing can't possibly go any higher. It's probably going to pull back. I'm going to short here. You really should not short before the value area gets broken. If this area gets broken, everyone who's long up here during the previous 4 hours, because that's what this is, are losing money. And so if it stays above there, it's going to continue to trend up. And you can see that's what happened. Even though it went up, it went kind of sideways, kind of gradually up, it went up another 60 pips, and it stayed above the value area. This is a wonderful tool for letting you know when to get the hell out of a trade, or consider buying, or in this case selling a trade that appears to maybe have moved too much. All right, so we're going to Let me see here. Put that on this one and just show how it worked in this one. Underneath the yellow point of controls, that's the average price of the previous 4 hours, you want to look for sales. So you can see that it started off today underneath the value area. The next 4-hour period, here's where most traders had positions at 9708 for the previous 4 hours, and it spent 68% of its trading activity from this area right here to this area right here. Notice that time did not even go above the lower value area, and then the next 4-hour period opens. You can see it spent a lot of time in that area, and that's why this yellow line is right here. Again, it stayed underneath the value area. So this is one incredibly weak currency, and it just kept trending and trending. Again, this tool does not work live yet, so that's the main reason I haven't released it. But combined with our currency meter to identify the most trending pairs, with a future release soon is going to have these colored bars instead of, and we have that in there now, but it's not using my new code. Instead of looking at a histogram on each chart, like let me bring up the dollar Swiss right here, you can just simply have the bars colored, and that way you don't need this panel on the bottom. And when you get rid of a panel like that, you can have bigger bars, and it really gives you a little bit more clarity, and I think it makes trading more intuitive the bigger your charts are. So one way to increase your size of your charts is to increase the size of the overall chart, and another one is to get rid of indicators on the bottom that you no longer need. Notice the difference between that and this and this. It's just intuitively obvious. Trends down, sideways, down, sideways, down, and it's pretty much run out of steam right here near the lower bands and the fib targets that I do each night. So that's some of the easier ways of trading. Let's look for one more example today. The New Zealand was strong earlier on all time frames until maybe it started losing its strength around 4:30. But buying the New Zealand dollar and New Zealand yen earlier today definitely made sense. So let's find the New Zealand dollar here. And I'm going to just put on both of those indicators that we use. The point of control, if it's above yesterday's and preferably last week's point of control, which it is, you can see last week's point of control is right here, and yesterday's point of control is probably somewhere in here because it's underneath the weekly. This one started the day off above yesterday's upper value area, so it's very likely to trend up. So I'll just remove that to make it easier to look at. And we will put on the 4-hour value area. And this will kind of let you know whether because you can see this trend went up and then it kind of ran out of steam. Look what happened here. First 4-hour period of the day, the market trended up. The next 4-hour period of the day, the price was underneath the value area of the previous period. So while the trend was up, our traders will be looking to sell, 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 and making money every time in what appears to be an uptrend. And this is a perfect example of why I've started trading with this, and I'm a big fan of it. And it's between this and some of our digital signal processing based tools we released last month, we've again, for probably the 10th time, revolutionized our software even more. And we should be releasing this as soon as my partner can get it to work accurately live.